Our next guest on our show is absolutely the finest in her own respective field in the automotive industry. And I think by the time you hear this, you'll be questioning if you need to change your existing insurance to this agent. It is an honor and a privilege to welcome one of the finest members of our community, let alone one of our finest insurance agents, Melissa Nicholas of Farmers Insurance. Thanks for being here with us today.
Thank you, Mitch.
I mentioned one of the finest individuals. You have your fingers and feet and hands and whole life, I mean, in so many parts of our community that I'd like to start by giving our listeners a little idea of just what a part of a member of our community that you are. So if you don't mind a little history about Melissa Nicholas and all of the things that you're involved in currently.
Okay, currently I am involved in multiple nonprofit agencies. I believe in giving back to our community and helping others. The main stuff I am involved in, I'm alcohol and drug abuse prevention, HIV/AIDS prevention, financial literacy classes, classes for single parents, also involved in suicide prevention, raising money for at youth risk in the community as well. And
you're also a president or co-president or vice president of a couple of our car clubs here in Northern Nevada.
Correct. I am vice president of the BMW Club and co-chair of the Mini Cooper Club.
Okay, so you just mentioned about 400 hours worth of work a week, not to mention an extraordinary insurance agent in our community as well. So if I'd like to get into some of that because we had this conversation and I think it's really important. Part of what we're up to as a show is educating consumers one car buyer at a time. And you are involved in that. It's one of the beautiful marriages of why we've asked you to be not only a guest on our show, but a regular guest, so we can have these conversations with our community that they may have not even had with their own agent. And I really appreciate you taking on the educational knowledge base for our community. But one of the things we talked about was that it's in the decades that I've been in the industry, I've heard the same thing from folks as well. That they wait to look at their policy and review it and for it to renew, for the expiration or the renewal date to come before they do a review of their policy. And you and I were talking that may not be a good idea, that some of these folks, if they haven't sat down with their agent and they haven't done a thorough, complete review of their policy, they could fall into the vast majority of people that are either significantly over or underinsured. And you were mentioning, what do you think the percentage of people that are properly insured are in our community?
From what I'm seeing, maybe about 1% at the most that are actually properly insured.
And here's the truth. That is probably an overstatement, and it would probably be under 1%. And I really believe that. And I think if our community listens to the conversation we're about to have around that, it may cause them to reconsider waiting until their policy renews to actually have a policy reviewed. And so let's talk a little bit about some of the risks in being under or overinsured.
Well, overinsured is something we don't see very often. There are some individuals out there that are can technically be considered overinsured. However, in my opinion, there really is no such thing as being overinsured. In terms of being underinsured, I would say just about the majority of the population is underinsured.
Well, let's begin with our state liability policy limits. They're 15, 30, 10. And those are scary numbers to both of us. But let's talk about what each of them represent to begin with.
What that represents is $15,000 per person in terms of liability coverage for each accident, up to a total of $30,000 for the accident. Basically, what that is if you are hit and somebody has 1530 coverage, as the individual that is injured, you have $15,000 available to you to cover your injuries. In most cases, that's the cost of about an ambulance ride, and if you're lucky, one night in the hospital.
Wow. And then if there's more than one person in there, let's say there's 4 or 5 people in there, the total policy stops paying at $30,000.
Correct.
So there's other issues that would generate would be uninsured or underinsured motorist coverages. We'll get to that in a second. But you were talking to me about the number of people that are when they're underinsured, what they're really putting at risk. So tell us a little bit about some of the actual claim sizes, the average claim sizes in our state, and what they really should be scared about.
The average claim sizes, unfortunately, keep increasing from year to year. The most recent statistics I have, unfortunately, are only for 2005. But for Nevada, it's right around 400,000 is the average payout on a medical claim for accidents.
So even somebody that had, quote, 100, 350 may be significantly underinsured.
Correct.
And so you were talking about in that same statistical data that, and I think you have some stuff that goes back from 1999 all the way up to 2005, and you can see the progression of cases, of liability cases in the state of Nevada in automobile accidents that were over $1 million.
Correct. Starting 2004 to 2005, roughly 35% of those are over $1 million payout. And that's a significant jump. From like 99 to 2001, it was roughly 15%. And then 2002 to 2003, it was about 24%.
So and you can understand why. I mean, the cost of the medical facilities, equipment, technologies, expertise in the level of reconstructive medicines. I mean, it's all there. I mean, it explains why the cost keeps going up as the quality of care goes up with it, I would say is part of it. But the problem that generates is what you just said, that less than 1% of the people are really properly insured. And what happens if, for an example, they have 100,000, 300,000, and 50, which is $100,000 per person in liability, 300 per collision, and 50,000 in property damage. And let's say that they run into a Ferrari, which is valued at more than $50,000, most of them, and then they also wind up injuring somebody for well over $1 million. What happens after that when their policy has a $100,000 cap on that individual?
What can happen at that point is any automobiles you own that are worth more than $15,000 that you have the equity available in them can be taken from you. Up to 25% of your earnings, as well as any cash you happen to have on hand, anything in your checking accounts, savings accounts, money market funds, stocks, pretty much any money you have available to you, including any annuity proceeds, and life insurance policies as well, can be seized.
And I think the annuity proceeds were over a specific dollar amount, but it's only a few $100s a month.
$350 a month.
Yeah, I mean, just about everything that you've worked for or saved for, equity in homes, properties, cash savings, all can be seized, basically.
Correct.
Garnished.
And you also can be forced to sell off any of your furnishings, electronics, pretty much anything you own, if in excess of $12,000.
Well, it's just the risk is extraordinary. And so I hope right now that there's some of our listeners that are going, wow, that is a little bit frightening. The statistics, the number of $1 million claims, and that are hearing, that they have some, they've worked their life and they've saved and they have some value and some asset that they'd like to even be able to pass on to other generations. It's at risk. That if they haven't had their agent sit down and review what their asset worth was, their policy limits were, that they really shouldn't be waiting until the policy renews to do this. They should be doing it immediately.
That's correct.
And I think what you said is that you have an interesting approach to even how you provide these quotes and policy reviews. It's actually a pretty significant process. You don't just say, let's just artificially make a number. You sit down and you spend a great deal of time determining how to insure a specific individual.
Yes. Go through assets, what is currently in the bank accounts, what you currently earn, what your house is worth, what you owe on it. Pretty much anything you have that you own or have debt to, we go through to ensure that we've got the correct coverages for you.
Well, and this is the level of concern. I mean, this comes from a person that's really passionate about what they do. This isn't just an accident. Again, I mean, we talk about this on our show. There are people in our community that take what they do so seriously, because what happens when somebody isn't properly insured, their life changes, and instantaneously, because they didn't have proper information from an expert in the industry. A license alone does not always indicate the level of knowledge that we're endorsing you as our community support, even in your insurance choices. But Melissa, for an example, what kind of time investment would they expect to spend with you to even determine proper levels of coverages?
My average client would be anywhere from about 45 minutes to an hour.
And so if somebody wanted to set up one of those appointments, like for an example, and I'm going to recommend right now that our listeners that are hearing this, that we've got them thinking, maybe it is a good idea for me to have this reviewed, that they call and leave you a message this weekend so that they can schedule something with you beginning of next week. You'll follow up, call them back, set up an appointment, that they don't put this off. What phone number would they call to leave you a message today?
775-829-0626.
And I hope some of our listeners right now take down that number. Let's give it to them one more time. So if they don't have a pen, we'll give it to you again at the end of the segment, but go ahead and give them that number one more time.
829-0626.
So we mentioned earlier a little bit about the underinsured or uninsured motorists. So you were mentioning that somebody hits you that in order to get their driver's license in the state, they've met the state's minimum 15-30-10. And yet they hit you, they're at fault, and they're underinsured. How many times do you see that coverage lacking in a policy?
The majority of it.
It's the same thing. Less than 1% of the time are they properly insured to protect themselves if they're hit by somebody else who doesn't seem to have the same consideration.
Right, correct. And especially right now in this economy, there are a lot of individuals that are lowering their coverage limits due to finances. And in my opinion, that's one of the worst things you can do. If you lower your limits and you're in an accident, trying to save a few dollars here and there, you now potentially have lost everything you own.
Wow, and I get that, and it frightens me for both parties, because you just said it. There's the individual that lowered their coverages that now is looking at giving up everything over a few dollars in their insurance premium, and then the life of the individual that they hit that may have not been adequately underinsured or uninsured covered, that now their whole financial stability is at risk as well. So it's so unnecessary. Again, it's about reviewing those coverages. I think one of the interesting things that you mentioned, and I think a lot of our listeners, even those that are savvy on their insurance, that have their policies reviewed all the time, will be astonished to hear is on the subject of medical payments. Tell us, you shared something with me on that. I wanted our community to hear about that. If they're about the health insurance as opposed to automotive medical payments.
Correct. On the medical payments on an automobile policy, it is pretty much a no questions asked, does not matter who is at fault in the accident type of coverage. If somebody hits you, you can use your medical payment coverage for your copays or any doctor bills you may have. When it comes to actual health insurance, if you are at fault in an accident, there is a chance now that the medical health insurance is not going to pay for your medical bills because you are at fault. We are seeing health insurance companies starting to deny claims for that.
So again, and I'm not saying that we're not saying that all of them do that, but there have been cases now where the policy in the fine print of a health insurance policy can state that doesn't cover an at-fault collision.
Correct.
And then you have no medical coverage, except that of what your policy limits on your automotive policy are.
Correct.
Again, it's something people might not know that they need to look into, or that the other issue that you brought up about the health insurance versus medical pay in an automotive policy is that if people lose their job and they lose their medical coverage, they may not have remembered that they need to increase their medical payments, even if their health insurance would have covered it.
Right.
That they may wind up not having sufficient coverages in an accident because they lost their health insurance when they had a job change or something.
Or not even lose your health insurance. Maybe your health insurance plan changes and your deductibles are higher.
Got it. And then you just said that your medical pay on your auto policy can cover, even if your health insurance does cover it, can cover your copays. And so, like you said, some of those copays can be a lot of money as well. We talked a little bit before, again, about the full policy. And let's talk a little bit about comp collision coverages as well.
On your comprehensive and collision coverages, pretty much your collision coverage is going to cover anything that you hit or that hits your vehicle is what that coverage is going to be for. Your comprehensive coverage is for anything that does not regard an actual object hitting your vehicle or your vehicle hitting an object. If somebody decides they want to key your car, that's a comprehensive claim. Your windshield gets broken. Just even rock and sand damage. Driving through Nevada, everybody's got pits in their paint from the rocks. All of that would be covered under your comprehensive.
One of the things I think too is we talked about some of the insurance terminology, the parts that, again, I don't know how many people sit down, probably less than 1%, as I'm going to guess, that actually read their policy and understand the terms and provisions in it. So let's get it a little bit in, if you don't mind. We have some time to do this, into some of the commonly misunderstood terms in the automotive insurance policy, like ACV.
ACV is actual cash value, and what that actually is the amount that your vehicle or property could be sold for on the date of the loss. So if you're in an accident today, what would your car actually sell for on the going market today?
Well, and so the question is, and there's some policies would be written ACV and others would be written as replacement value, for an example. But there's a term there that a lot of people don't look at their policy and know.
Correct.
So let's talk about some of the other commonly misunderstood or even people don't even know what they mean terms in an automotive policy.
Liability. A lot of people do not understand where, like, your limit of liability would be the maximum amount of money that the insurance company would agree to pay for. In the instance, the state minimums, $15,000, $30,000 would be the liability limits.
Okay, and some of the other ones you have too. You have, what is this, property damage. And this is a big one. I think we got into a lot of the liability, but we really didn't get into that property damage subject yet, about what you hit and the limits of the liability, the limits of your property damage coverage. So let's get deep into that one too.
Correct. The state minimum is $10,000, and really $10,000 is not going to cover a whole lot. If you rear end somebody, right now your average bumper alone is between $2,500 to $5,000 to replace, depending on the type of vehicle you hit. So if you hit somebody and their bumper is $5,000, but you also have damage to your car, which would be more likely, if you only have the $10,000 in property damage, there's a very good chance that your vehicle is not going to get repaired fully.
Well, and look at some of the vehicles that are on the road that you're driving next to, and if you were to hit one of those again and you don't have sufficient coverages, we go right back into all of your assets and net worth are at risk.
Correct.
And so typically, is it the same process in determining the proper property damage limits for an individual based off of their worth and net value?
Correct.
As an individual?
Yes.
Or do you look and you say, well, the top car on the market is $250,000. We recommend you have $250,000 worth of coverage in case you hit one of those.
Yeah, it's based off of your assets, the type of vehicle you drive, as well as the other vehicles on the road. There's also other things. I mean, what if you hit a power pole and knock out power, or you knock down the power pole, or you hit a tree and that tree there falls on somebody's house?
And you've seen these claims.
I've seen these claims,
wow.
Yes.
and see, I think like I just said, I actually am guilty of it. I hit another car. So therefore, I'm just concerned about what the replacement value of that is. But you're right. This can lead into other property, fences, homes, structures.
Correct.
And the cost of those. And that's all falls under the property damage, not just the other vehicle.
Correct.
And your vehicle. Do you have like a set, the state requires 15, 30, 10. Do you have a set minimum that you recommend that there isn't a person that should drive without at least coverages?
At least 100, 300, 100.
And so again, you're talking $100,000 per person in a car, $300,000 for all the people in a car, and $100,000 worth of total property damage between all cars and structures.
Correct.
And there's another thing there too where coverages. Some people will have a car and it's financed, and as soon as the financing is over, in order to save some money, because the lenders, whether it's a finance company or a lease company, usually demand insurance to protect their asset while it's financed. Do you see a lot of people removing that coverage when the loan's over that shouldn't?
Yes, we do. There are a lot of people who are driving $30,000, $40,000 cars around that's the value of them once their loan is paid off. You take off your comprehensive and collision coverage and you're in an accident, you have absolutely no coverage to be able to repair your vehicle.
So that's probably not a good decision. And I think this is one of the reasons for it. Insurance as a whole, I think a lot of people, they feel that it's a requirement by law for reasons that they don't understand. But when it comes to automotive policies and they need an order to even get a driver's license. But insurance as a whole is designed to do what for a community?
Protect individuals and their assets.
And spread that risk amount through a community level, through an entire community, and so that each individual doesn't get exposed to, like you just said, a $40,000 loss of a vehicle because the financing was up and they didn't have any insurance and now they can't afford a car. So it spreads the risk through a community of people and makes it so everybody can afford to have peace of mind.
Correct.
And then on top of that, it's a matter of law in Nevada, and the fines are pretty hefty too, aren't they?
Yes, they are.
I think they just went up recently. They're over $1,000 or...
The minimum fine for having no insurance in Nevada is $250 per vehicle. And then that can increase based on the number of offenses you've had and the number of days you're without insurance, and it can go up to $1,250.
It's a pretty costly fine, and it's just on top of that, not worth the risk. Again, I think that I want to touch again on the fact that I'm going to encourage our listeners to have their policy reviewed. If you haven't sat down in the last 6 to 12 months and reviewed in depth your asset, your worth, your cash, your life with your own agent, that you need to do that. And if your agent hasn't tried to schedule that with you, we're going to recommend that you look into another agent because they should be doing this. It's a matter of ethical standards, in our opinion, that they should be asking you to verify that you're properly insured, at least on a minimum of how often, Melissa? At
least once a year. But anytime there's a life-changing event, you have a child, retire, change jobs, buy a house, buy a car, anything that's major life-changing, you definitely want to sit down and review your insurance coverages.
And so if you haven't been contacted by your present agent and you haven't, or you just have, just continued to pay your premiums because this is what we do and it's a habit method, and you haven't re-looked at your insurance, and again, as we've seen increases in medical cost, increases in vehicle repair cost, and technologies in those cars go up every year, and so do the cost of repairing them go up. If you haven't reviewed your policy in the last 6 to 12 months, give Melissa Nicholas at Farmers Insurance a call. And she'll start, you mentioned that you'll start by trying to do an apple to apple. So you could show them that there's a commonality of premium or savings, and then apply that then to the coverages that they really should have.
That's correct.
So that they can get some sense. So I think one of the hardest things for people to want to do is, and I think the thing that stops people from doing this most often, tell me if I'm right or wrong, is that they think it's too difficult, that it takes too much effort. And really, you mentioned to me how easy it is for you to do a policy review with somebody, and that even if they can't find their policy, what you can do.
Yeah, correct. If I just have basic information, make, model, year of vehicle, as well as sitting down and reviewing assets, that's really all I need. If you happen to have your current policy, great. It comes in handy to get the VIN numbers for the vehicles and things like that. But it's not necessary.
But you have a national database you can access a lot of this information from if they don't have it handy.
Correct. If you're somebody's with a major insurance carrier, if I have their driver's license number, name, date of birth, and address, Most of the time, I can pull their current insurance information.
And if they don't, all you have to have is a release to get that information from the present agent.
Correct. I'm happy to contact their current agent for them.
And get a copy of that policy so you can do a quote. And you do all that work before they get there, so that when they get there, it's right to the point and to get them in and out and on their way, but to give them ease and comfort and security in their life. And once again, for those people that now have a pen, how do they call, leave you a message this weekend to schedule an appointment to have you review their policy?
It's 775-829-0626.
That's Melissa Nicholas, one of the finest human beings in our community, let alone 8 insurance agents with Farmer Insurance here in Reno, Nevada. We're blessed to have you on our show. Thank you for being here today.
Thank you very much, Mitch.